It's really a exciting time of expansion because the market, as we all know, if you work in the accounting tax industry, it has been since COVID. There's been a lot of retirements. There's been a shortage of accountants across the country nationally. But with our presence across the Northeast, we've been, I would say, better able to cast a wider net for talent.
Welcome to Legacy Conversations, recorded right here at the Barn on Collimer Road. I'm your host, Mark Modulewski. Our mission, to educate, inspire, and entertain. Thanks for tuning in. Let's get started. Dario, thanks so much for being here at Legacy Conversations.
I appreciate it, Mark. Thanks for having us. I look forward to the talk today and continuing the dialogue that we started a few months ago on kind of continuing to build some more connections in the space and some teamwork for the people that we serve.
Yeah, no, that's great. Yeah. So how did we first meet? I can't even remember how or when that was.
Yeah, I want to say it was maybe May or June, and I just I had known of you for some time, working with customers, not directly that I've worked with per se, but ones that Farm Credit East has worked with.
Yeah.
And I thought, hey, why don't I get to know Mark a little more? Because I know some of the other folks there. I just had never had a chance to get to know Mark, and I wanted to be intentional about making that happen.
Yeah. No, and I appreciate that. And I remember, I think we may have spoke at some things before. I've been at some things that you had spoken with. So just so everybody understands, give them a little background on who you are and what you do.
Sure. So I have been at Farm Credit East for about 12 and a half years.
Mm-hmm.
My name is Dario Arezzo, and currently, as of July 1st, I'm the Chief Financial Services Officer at Farm Credit East. So I oversee, and maybe take a step back for a second here. Farm Credit East is primarily a lender to farmers in the Northeast. So our bread and butter is providing sound and secure credit to farmers so they can provide us food across the Northeast. But a component of our institution is ancillary services like crop insurance, consulting, tax advice, and I oversee those folks within Farm Credit East. And it's been a really nice transition. Prior to that, Mark, I spent a decade as a full advisor in a consultative role, assisting clients in tax returns, in estate planning, in mergers and acquisitions of businesses, and trying to provide cutting edge solutions to those customers that we serve. And it's been very rewarding. For me, my background has always been a tax focus.
Mm-hmm.
So I went to, and it's actually funny because I was talking to a member of our board at dinner a couple nights ago. He's like, "How did you get to Farm Credit?" So, what's the story there? He's like, "Well, I actually had no idea that working with farmers was actually a career path.
It was actually a thing.
And I was fortunate to go to Cornell to play football in college. And when I was looking for a job, so after Cornell, I went to Albany Law School.
Mm-hmm.
And when I got out of there, I was talking to a fraternity brother of mine that I played football with for 4 years. And I said, "Hey, Justin, I'm looking for a tax job. I'm talking to Ernst & Young, some other big fours, some tax shops down in New York. Any thoughts or any advice?" He goes, "Well, Farm Credit does tax stuff. Why don't you give us a try?" And
this is Justin Mortensen.
Justin Mortensen, yeah,
Oh
this is Justin Mortensen. So Morty
he's famous because he was in my Lead New York class.
Was he? Yeah. So Morty, as we called him, in college. I said, "Hey, Morty." He goes, "Yeah, okay. Let me try talking to somebody from Credit East. So who do I talk to? Here's my resume."
Yeah.
And the rest is history there. And it was interesting because that was one pivotal moment of just me ending up at Farm Credit. And as I was mentioning to the same individual a couple nights ago, the other pivotal moment was even going to Cornell in the first place was kind of happenstance of I was slated to go to Dartmouth, but then they told me I was 99% good to go, but Cornell had the paperwork. So I took the bird in the hand and said, "Well, Cornell's got the paperwork. I'm going to sign."
Yeah.
I don't want anything to fall through and be left with nothing in the hand.
Yeah.
In that regard, because when you're getting recruited for football, it's a cutthroat business, and you got to move fast, or offers come and they go within 24 hours.
Right.
I had some offers to play Arizona State for Dirk Cutter. I was looking at your Rutgers. Greg Schiano came over, and he was very impressive coach as well. That you really impressed me, and I seriously considered Rutgers as well, but ended up Cornell was, being a local Syracuse kid,
Yeah.
not too far away where, far enough away where my parents couldn't drop in, but close enough where I could bring
Yeah.
back laundry on Thanksgiving.
Exactly.
So it all worked out well there. And as part of that trek, I've been here for 13 years now, but I did take a brief, about a year off where I was part time because about 2.5 years into my career, I took a brief stint away to go back down to NYU for some more tax education. It's called an LLM, a tax master's, if you will, for attorneys,
Hmm.
but still working part time at Farm Credit. And I was working in the Clarac office, which is about 40 minutes south of Albany. And at the time, I met my now wife, who was living in Syracuse. And so once I got done with that, we moved out to Batavia, New York. So I
Yep.
was working with folks out that way. And then once we got married, my wife was working is still working for an employer in East Syracuse.
Okay.
And we ended up moving to the Phelps office, Geneva's as we call it. And we ended up selling in Central New York.
Mhm.
And in the interim there, I was consulting for clients. During COVID, I was bored being locked in the house, as we all
Yeah.
were. So I got the CFP certification, Certified Financial Planner, just for kicks and giggles, just for
Yeah.
fun, to kind of keep my mind away from not being able to go outside much. And the rest is kind of history. The last year and a half, I have been fortunate enough to lead and coach managers who are providing coaching to our staff on the field, and now on the executive team, helping to provide strategy for the organization.
Yeah. Well, that's cool.
Yeah.
I didn't know a lot of that. So
Yeah.
where did you grow up in Syracuse? Where did you grow up?
Yeah, so Mark, great. I grew up probably 5 minutes from where we're sitting right now.
Oh, really?
So I grew up it's technically North Syracuse, but it's right across from Cicero. So
Okay.
Lacey Gardens Drive is really right off of Thompson Road back here,
Yeah.
about 5 minutes here. So
Cool.
we're right here in Cicero is where I grew up. Although I didn't go to CNS, and I just want to give a shout out to Christian Brothers Academy, who
You went
just
to
won
CBA, a
went
CBA
went to
boy.
CBA, that just won the state championship again,
That's
41 to
right.
40. They beat CBA Albany. But the 2014 was the first state championship team of CBA. So I want to shout out to all my friends and folks I played football with there on the '04 team.
Yeah,
Yeah.
yeah, that's cool. When we moved back here, my wife's little brother played at Cas, and Cazenovia High School had a good football team, and I remember going to the Dome to watch them play, and they were in a different class, but CBA was playing in the Dome for the state
For the
championship.
state championship. Yeah. So it was a good ride with a good group of friends, and you certainly winning and being a part of a winning culture, you stay close with people. So
Oh
it's been a
yeah,
good group of people to work with. So, and we, now my wife and I live in not too far away, Skinny Hollow. So we stayed local to the Central New York region.
yeah, that's
Yeah.
cool.
Yeah.
That's so financial services, kind of an uh, interesting adjective, right? Because in theory, people would say, well, Mark, you're in financial services. And then there's folks who work for banks, and lenders are in financial services. So tell me more about like your role. Like Farm Credit, everybody knows as probably the best, the one who is most out there lending to agricultural businesses, right? I work with hundreds of farms across the Northeast, and almost all of them have or have had credit with Farm Credit. So then you have this financial services part, and there's things like payroll and tax planning and all that type of thing. But what falls underneath it? What is Farm Credit doing? Where are they trying to round out things other than lending?
Sure. Yeah, and it's a great question, Mark, because certainly, Farm Credit East, and I think now, a lot of banks are starting to see what we see, which is as you provide more things beyond the lending, you can have a competitive advantage against other lenders.
Sure.
So we've always viewed our services as another component to the relationship
Mm-hmm.
that, if a customer knows their lender, but also a guy like me or somebody else there, and uh, we can bring value in other ways, bringing a team approach to customers is something few other lending institutions can do, and we feel that it makes our customers more successful when we provide sound advice. It provides a better value proposition, and it keeps customers getting the value and keeping them happy, and uh, really driving back to it's our mission as a cooperative. So the governance structure where we are owned by the farmers that borrow money from us, that they own the company, and our board of directors is folks that are farmers that like the CEO, and it has been, I think, it was really a lot of foresight that went into it years ago when Farm Credit East started our services function, because there are several organizations that provide financial services within the farm credit system, which spans across the country. Every part of the country has its own farm credit system, but there are only several handful that are currently in the space.
Yeah.
And the ones that aren't in the space, I've talked to some folks, and they are of the things that they're looking at to try to bring value to customers.
Mm-hmm.
Besides just the credit, a lot of things that we're doing, particularly around consulting,
Yeah.
benchmarking, that type of stuff, they're looking at ways to break into that space.
Sure.
And so we've had luck to have had foresight from prior leaders at Farm Credit East to have gotten us into that years ago.
Yeah.
And so we have a really solid platform to expand on in the future, and it's really a exciting time of expansion, because the market, as we all know, if you work in the accounting tax industry, it has been since COVID. There's been a lot of retirements. There's been a shortage of accountants across the country nationally. But with our presence across the Northeast, we've been, I would say, better able to cast a wider net for talent. We also have the ability to rely on a lot of our technology experts within Farm Credit East. We have a chief information officer now, for instance, that's new to the executive team. We are
Is that Corey or is that someone?
that is Bill Kohler.
Big Kohler.
Yeah,
Okay.
Bill Kohler. Corey works for Bill,
Okay.
and we just spun up a few months ago something called the Digital Innovation Hub.
Yeah.
So where we try things and we succeed or fail fast in them to innovate, and we've dove in heavy in the space on artificial intelligence.
Yep.
To enhance our staff's productivity, tools that they can use to serve customers.
It's not going away.
It's not going away, and it's really an important point of the optimizing data, optimizing artificial intelligence, and one of the things that we're really excited about that we have just started with is we for years have had a really successful dairy consulting program, where we work with dairymen to benchmark their business to see how their how their milk prices are doing compared to peers, how their income over
Profitability,
feed costs,
efficiency.
profitability,
Yep.
efficiencies, all that stuff.
Yep.
And now we are one of the first projects in our innovation hub is to be able to layer in through our online portal. We're trying to prove out a concept right now to see, so a proof of concept is, does it work? Can we do it? So we're
Yeah.
going to try to see, can we get this thing online, and can we embed natural language modeling and artificial intelligence into that, so folks can maybe do some mini modeling themselves
On their own.
on their own.
So imagine a time where a dairy person can go in and say, if I did this, they could talk to your system. If I did this, how would this affect me based on how other people who have done that and how it's affected them?
Exactly. Because right now it's been, our consultants do a phenomenal job. They bring so much value to our customers, and they go out and they go through the numbers. And imagine being able to kind of do that and adjust a couple different variables
Yeah.
in real time, and
Yeah.
what would that do to your projections. And so if we can kind of crack the nut on that with dairy, then our aim would be to look to scale that to other industries. The reason why we started with dairy, Mark, is just because for years, well, particularly in New York State, it's a large dairy
No
concentration,
doubt.
and we spent a lot of our time and effort into developing that tool, but we would look to expand to other industries if this is
Yeah.
successful,
Yeah.
and see, can we do this for different types of, to cash crops, to greenhouses, to other
Right.
timber, for instance. So with technology, things be like that become very scalable.
Right.
So it's a really exciting time to be in the financial services space for that reason, as well as even on the tax front with exploring ways to further enhance the tax process for customers and further deliver value and drive value in that way.
Make it easier.
To make it easier,
easier.
no doubt,
Right.
no doubt, to make it easier for customers, to make it seamless, just to provide really the term we've been using is a best in class experience.
Sure.
If something is not best in class, our driver going 25 is it has to be.
Yeah.
And so my charge is for all things, whether it's a payroll, consulting, crop growers, is this product has to be best in class. Period.
Yeah.
Yeah.
Well, because in the past, right, for me, from the outside looking in, so for 25 years, I've been working with farmers, right? And I'm an advisor and a consultant, and we manage money, we help with intergenerational farm
Mhm.
transfer, we do insurance, we do benefits, etc. And Farm Credit was always the leader in lending, partially because of the co-op structure, because of the way in which they borrow from the government, because of their dividends. They just have a distinct advantage. There's no doubt about it. And then they had these services around the outside, like, well, I do my payroll through Farm Credit, or they do my taxes, or I meet with Jack Smith, who does some consulting with me. And the one thing that Farm Credit did amazingly well was lend money.
Mhm.
And then once you got into some of those other things, especially in the past, they did it okay. They did it good.
Mhm.
And now you're seeing this resurgence a little bit where Farm Credit's like, hey, look, we have to lead and modernize. Because let's face it, if you're Nike and you have 90% of the market, you're not growing it. You're just trying to keep where you are. If you're Farm Credit and you lend to 90% of the farms in the Northeast, everybody's nipping at your heels. So it's the technology, it's the experience, and it's the services that you guys are really focusing on trying to make better so you can keep that market share.
100% there. No doubt about it, Mark. And I would say, yeah, to take your example, back to the dairy piece, right? Like the dairy consultants, the product that they've had over the years has been, one of the best products out there on the market.
Right.
But to your point, it's okay now entering this new phase. If we don't take a hard look at it, somebody will start up something else,
Right.
right? And they'll create a product that,
Yeah.
if you rest on your laurels, all you can do with a high market share is lose that market share.
Exactly.
And so it is. I wake up every morning and say, is this the best product that we're offering, or what is out there that can make it better? On the tax front, certainly it's a game of, we last year, to your point of, okay, there's not many people that do tax work purely focused on agriculture,
No doubt.
right? And the other piece of that I would say is, Farm Credit East has no choice but to work with farmers. We can't work with
Right.
anybody else, so
Exactly.
we don't have a pool to say, let's not keep up to date on the farm tax stuff and go work with car dealerships.
Right.
We
'Cause
couldn't
that's
do
who
it.
you are. That's
It's
what you
who
do.
we are, and it government regulated. We wouldn't even be allowed to do that.
Right.
And so from a tax front, we've had a lot of success in working with a lot of really high-end customers from a tax. Our tax consulting has been, I would say, second to none. But we recognize that the growth is there to not only keep up with those customers, because years ago, a consultant, when I started at Farm Credit, would say, you're never going to be a mile ahead of the top progressive customer, but you got to be just a hair ahead in the
Tiny
information,
bit.
just a tiny bit.
Yeah.
Otherwise, they don't need you.
Right.
And so, from a tax standpoint, I've been a big believer of, and now working with Joe Baldwin, who's our director of training, of
Yeah.
bringing cutting edge tax training to our tax advisors, our consultants. And what do I mean by that? I'm not a fan of just going to agricultural tax trainings. I spent my career really looking at what are the best knowledge platforms or conferences or materials that are being talked about, for example, in the hedge fund industries,
Mhm.
right? Maybe a 2 and 20 carry from a LLC standpoint, some of those types of things. What are the best estate planning things that are being done for high net worth individuals? And then
In broader markets.
in
all
broader, in
markets.
all markets,
Right.
exactly. And then, okay, figuring out then how to take those cutting edge ideas and bring it back and maybe modifying it slightly so it's relevant to agriculture and germane to our customers.
Yeah.
Because I really have a strong preference for, if you're just looking at what folks are doing in ag from a tax standpoint, it's insulated.
Yeah.
And you're going to get stale. And so I have really tried to lead the charge in talking with Joe and doubling down of, we got to broaden out, continue to broaden out, and continue to double down on these conferences. And then Joe is now, as part of this director of training, which we never had historically. We want to impart this high knowledge internally to all the new staff that we hire
Right.
and get them up to speed, because we can grow as fast as we can train really good tax people. There's certainly several really high-end tax accountants out there that don't work for Credis that are in the space,
Sure.
but they continue to retire or get close to retirement there.
Yep.
So the market opportunity is really great in the space, and it's the limiting factor is just how to use
people.
people and technology, and so we're doubling down on both people and technology because you have to have both of those,
Yes.
or somebody else will beat you.
Well, I mean,
Yeah.
if you think about it, right? So the hardest part isn't necessarily gaining the knowledge, it's having the people there, because Dario can't be at every single farm in New York, right? So that you have to train those people. So now you have to recruit great people. And to recruit great people, you can't have antiquated systems. You can't say, hey, log in, and they look at a website that's old. You can't say, well, here's our tax software, and it's the same stuff we've been using since 2010.
That's right.
So it's one is you want the customer experience to be better. You want the advice to be top tier, but to attract the top talent, you have to have top systems.
You have to
top training. You have to have top everything.
you 110%. First impressions matter,
Yeah.
right? They matter, and so when you're hiring somebody that's coming from somewhere else, or that's maybe right out of college, or even an experienced hire, and they log into your system, well, what are they seeing? And so we have, and Mike Reynolds, as our CEO, has really had the foresight to double down in that space. The adding of Bill Kohler as the CIO is one example of that. But getting best in class systems, whether it's Microsoft Teams across our platforms, using Salesforce across our platforms,
It seems
optimizing.
relatively simple, right?
Right.
But there's so many businesses that like I work with. So I work in the ag space and
Yep.
outside, and I think what helps us is that I see the outside of the ag world as
Mhm.
well, just like you're talking about. But when I say to folks who have good businesses, well, we use Teams as an IM platform so our team can kind of communicate back and forth. We can capture it all. It's all in there compliance wise. We already know what's going on. And then I have these big companies that have no way to talk. It's amazing.
It's
Yeah.
amazing, Mark, and even for example, it's going to cost some folks some money, because there are a lot of accounting firms out there, for instance, where they're smaller shops, maybe 3, 5, 10 people,
Mhm.
and they're still using paper for their tax
Yeah.
return process. And as they look to retire, I think the market of those folks looking to buy paper firms these days,
Oh.
even it is a hindrance. So the evolution of these technologies, and it's certainly always a hurdle to get people to try a new system, because people generally get used to a system, and
Yeah.
they're good at it, right?
And they don't like change.
And change can be tough, but once you get over the initial hurdle of, hey, this is how this benefits you,
Mhm.
here's how Microsoft Copilot can be a benefit to you.
Right.
I could meet with Mark, the farmer, and instead of me going back to the car and typing up my notes and having to edit the typos and grammar,
Mhm.
I can plop that summary into Copilot and have it do within 5 seconds. Clean it up and save me a half an hour.
Yeah, it's so
Yeah.
amazing. So our firm uses a dictation service. So when I'm done, I just press a button,
Mhm.
I talk for 4 or 5 minutes, and then it sends an email to my team who captures that information, puts it in our CRM. We've been looking at some new AI where I can literally take my phone, press it down. You and I talk for an hour and a half, and when it's done, I can say, "Do me a favor, summarize this, send me the notes, do X, Y, and Z." So that part of AI, while it's sometimes scary to people because that
Mhm.
means they're listening, the reality is the efficiency of that is amazing. Plus, things don't fall through the cracks, right? If you have a 2-hour tax meeting with somebody, they may think that what you took out of it was X, Y, Z, and you go back and you're talking about A, B, C. You don't even remember.
Don't even remember. It's incredible how far, and it's what's exciting, and it's back to the point that if people don't use it, they're gonna have I think a hard time, because those things they can summarize meetings. You can ask it what questions were, had conflicts in them, what's left to be unaddressed, what are the takeaway action items to be resolved for,
Right.
and it can spit that all out within 2 seconds, and then you can even just send off a quick email if you want to. Here are the things that are left unresolved. Here are the timelines of what we need to do. Here are the responsible parties for
Right.
that. And it's really cool. Even if you're on a Teams call, it'll pick up who's talking, and
Yeah.
if me, you, and three other guys or gals are on a call, and it'll label who's talking, and it
Yeah.
can tell you who's got
said
what
what?
opinions, who said what.
Yeah.
And I just think that this space is so exciting to be in, and it's a spot where, yeah, I think, working at Farm Credit East, it's, if I was working somewhere where they weren't doing this stuff, you'd be concerned.
No doubt.
Because you can see how the timeline of these things of companies now, you can have startups come in, and AI over time will be able to scale, smaller shops where if they're heavily involved and you're not as a larger institution, you could fall behind
There's no doubt.
really quicker
So
than what it used to be.
like the big four, they had everything,
Yep.
and it's the technology. And now you have some of these smaller companies that'll be able to use tech to catch up to them pretty quickly because of that technology.
Because of that technology. That's right. For big companies that don't use the technology, don't invest into it, smaller companies now will, unlike years ago, to your point, that couldn't scale to those big sizes, they'll be able to scale if those big companies don't make the right investments into their platforms.
Yeah.
But if they do make those investments and pour into it, then the size and scale of what they can invest in certainly can outpace those other firms, which maintains that competitive advantage. But
And it helps attract and retain talent.
it helps attract and retain talent, no doubt about it, 100%.
Yeah.
Yeah.
Yeah, it's interesting because, my interaction with Farm Credit over the years has been where we're really, really involved, right? And then there's been times where we partner with the consultants on the financial services team. I don't think I've never really seen Farm Credit as a competitor because we kind of work together, right? Like we don't, Farm Credit does payroll. We don't do
Yeah.
payroll, right? We do insurance and investments, and there are some insurances that Farm Credit does, but not really the same thing. It's a different market. The transition and tax advice and the benchmarking is something that they do really well. And often when we're asked to get in that space, if Farm Credit is, I will sit back and say they do that really well. So why don't you engage them to do that, and I can be on the outside just trying to help you look through it. So it's interesting because over the last 20 years, maybe the last 10 in particular, I think Farm Credit has made a big push forward. Because in the past, like I said to you, it was always like, well, they have their market advantage and they're kind of just feeling good about their market advantage. And then all these other folks are coming in nipping at their heels. But it's changed. I'm a Farm Credit customer, right? I own some farmland in Madison County. This barn that we're sitting in right now is financed by Farm Credit. And people will say, well, why'd you do that? Was it the cheapest interest rate? Was it XYZ? And the reality was the ease of doing business, the service platform, right, is just, it's top tier. It's so much easier than working, I'm not going to name any local banks,
Yeah, right,
than a
sure.
local bank, right? Because it got done really easy. My loan officer, I can call him. He'll pick up the phone. I have his cell phone number.
Right.
So it's a big company with a small
feel. Yeah, and I guess two parts there, Mark, of, I agree in the space, although these days I really don't do nearly as much consulting given my new role, but I still have a small piece. And I have never viewed, and I've always told customers, you need a team approach to things. Because even, with consulting, there's overlap with maybe another accountant or another attorney. But I go, look, everyone at that table is playing a little bit different role. And also you're betting around ideas.
Yeah.
And it actually, in almost all cases, in my experience, it ends up costing you less money, frankly, too. Even though you may feel as a customer, you're paying 3 or 4 people around the table. Maybe it gets done quicker. Maybe there's better ideas that generate, because ideas get bounced around and they get batted up. And I've never been one to say, hey, it's got to be my idea or an ego's idea. From an ego standpoint, it's, okay, if my idea is there and somebody can make it better, that is great. It's a win for the customer.
Yeah.
And I think the collaboration just makes the customer. And at the end of the day, it's really all about making the customer more successful in that space. But to your other point on, even I think the ease of doing business, continuing to modify, and we've adopted our platforms over the last few years too. Of customers need to be able to get online. If Mark wants to get
Sounds
online,
simple, right?
send
Yeah.
send a message to his loan officer, or we have customers have people's cell phone numbers. They can call the customer. They can engage that way. But if they want to look online and be able to transfer money, go online banking, you have to also have a seamless digital experience. Because some customers may want that, some customers may prefer the phone, and some
Right.
customers may want you out in the farm. And try in all those cases, you have to offer a best in class experience to customers, because
Yeah.
different customers will have different ways of which they may want to do some business with you, and how they choose to do that business with you may keep them with you. And so that you need to be thinking about customer segments and how they want to interact with farm credit, or any business, and make sure that you are making it seamless and valuable at the same time.
Yeah.
Hmm.
So tell me about the structure of people at Farm Credit. So obviously I understand loan officers, right? That's easy. My loan officer is this guy named Jake. He's great. I call Jake or email him and he helps me with what I need.
Hmm.
And I sit on some boards with some folks at Farm Credit, and I understand like fundamentally what they do. So you have some folks on your team who are business consultants. You have some folks on your team that work in payroll. You have some folks on the team that are focused on tax. What are those different roles under Farm Credit?
Sure. Great question. So certainly all starts with, so Mike Reynolds is the CEO, and then
Yep.
his executive team is comprised of, right, like myself, who oversees all the financial services stuff. There's also someone who oversees all the credit functions. Then there's legal, communications, technology, finance,
Mhm.
and for example, under the credit role, then there's uh, a leader who leads the credit managers, who oversee the loan officers.
Yep.
Then we have, so then I forgot HR function as well in the
Yep.
executive team. But we have our loan operations team
Mhm.
that's overseen by an operations leader that makes sure that the closing gets done, all the
Yep.
transactions get approved, all the loans make it through as they should, the documents get taken care of. And for me on down, I have a leader who oversees our leaders. And the Northeast, how we've done it is we've broken it up the territories by marketplaces. So
Okay.
kind of geography based. For example, Western New York would encompass, out in Batavia, Hornell, Mayville.
Mhm.
Then you have the Finger Lakes area here in like Ontario counties with Cortland and Geneva offices. So it's broken up geographically, where every region has both a leader of the credit function and a leader of the financial services function, who roll up into a leader who then rolls up into the executive team leadership.
Okay.
And so they work hand in hand, those leaders on the ground in those marketplaces, to utilize their teams to provide service to customers. Because and that's a critical piece, because we're looking again at further doubling down on, right. You need the technology, you need the people. Then the third component of that is you have to have the execution on the ground to coordinate
Hmm.
going out to customers as a team
Yeah.
and bringing the value of. So that encompasses making sure you're meeting with folks on a regular cadence with similar customers within your office.
Mhm.
So kind of game planning with that, strategizing, and then bringing that strategy out to a customer visit where they have those folks at the table. And so our leaders in the local territories really are a key piece of that, to have that go on. And there's also within the financial services front, there's crop insurance, and they have
Yeah.
leadership there as well, where they're part of the team that's integrated, where they may go out with a lender or with a tax consultant to a dairy farm to see if they should enroll in protecting their milk prices, for example, or their crops. And when they all work together, it's a very
It's a cool package.
cool package.
Yeah.
And it's hard for even some of the larger banks, like you mentioned, I think trying to nibble at the heels and trying to
Right.
come in and right, and gain customers. It's a very hard proposition to
Yeah.
compete with, when
When
done
when
well.
it's done right.
When it's done right,
Yeah.
it is very hard for someone to kind of break into that moat.
Yeah.
Yeah.
Yeah. So the financial services arms of Farm Credit. So we know we've got the ability to hedge like milk. We've got crop insurance. We know that we do payroll, right? Farm Credit does payroll. You have these business consultants, and I've met a bunch of them,
Mhm.
and some of them, like, they're all very good, but they have their specialties, right? Some are on intergenerational farm transfer. Some of them are focused on, benchmarking. They're better at something or another. What else is there inside the Farm Credit underneath you that you're excited about? Like, because in a perfect world, like it seems like you would have somebody where if we lent them money, then that person would introduce these other services that we
Right.
have. Not everybody's going to take every service,
Sure.
but you certainly want them to know that, hey, we can do a good job in
Mhm.
this and this and this. And if it's all tied in, you call Jean Gallagher's office in Cortland, and she knows, hey, you're going to talk to this person,
Yeah.
this person, this person. So it's offering that one-stop shop that's become extraordinarily popular.
Yeah, and it's convenient. It's like I went to Valvoline last week to get my oil change. I pulled right into my car. Right, they open up the garage door.
Yeah.
I don't even gotta get out of the car. They sit
No,
there. They do my
I did the
inspection,
same
change
thing
my
last week.
tires. Right,
Yeah.
and I go, this is a darn good experience here.
Yeah.
But to answer your question, Mark, one of the other spaces that's really exciting that I believe has a lot of potential is our grant writing services.
Mm.
So Heather
I didn't even know
LaPierre
you did
has
that.
been, yeah, and
Yeah.
it's funny. Even I should just say that. Just take a step back for a second there and even say it's funny how we've been in the services and business now for decades, and I still get amazed every so now and then that a lot of farmers don't even know that we do anything but lend money.
No doubt.
And so that's a real piece. But the grant piece has been really exciting because there is a lot of federal grants, a lot of state grants that keep coming up for dairies too, or in all business, not just dairies, but value added grants.
Yeah.
You have a lot of USDA grants, energy type of grants for energy
Yeah.
efficiency, grants for digesters, grants for all sorts of things,
Right. Solar, all of those
solar,
things. Yeah.
all of that stuff. And the demand has been skyrocketing there. So we're continuing to add teammates and people focusing on that effort because the money keeps coming in, and I don't see that stopping both at a state and federal level. Now, certainly at the federal level, right now, given with the latest election results, there's some uncertainty regarding some of the stuff in the energy space.
Sure.
But that aside, the grants will continue regardless, and so we see that as a really neat space to be in. That is significantly growing.
Yeah.
Yeah.
Yeah. I didn't even know that. I really didn't. And it's amazing how many farms I speak with and they say, do you know any good grant writers? And until today, I didn't even
Yep.
know it was an option to
Mhm.
say, well, let's see if Farm Credit can help.
Yeah, and Heather has done a phenomenal job on the grant writing front, and we're looking to kind of continue to build out resources for her because the attention we have received on that has been significant there. So that's really exciting there, and I think 25 will be a great year in the grant writing space and beyond. And so we've done a lot of outreach to your point, Mark, of in the grant space, but also even next week, because one of the key components too that I feel is important as a cooperative, and that sets us apart from even other accounting firms or advisory firms that do that are, I would say, compete with us, is offering valuable content through our knowledge exchange,
Mhm.
right, through our marketing communications department. So next week, for instance, we'll have a couple webinars for customers. Those are free of charge webinars, but
Yeah.
one of them on how they can optimize their year-end software for the 1099 process.
Hmm.
Making it simple for you getting your vendor list done, getting your ducks in a row so that you can have a seamless transition to provide your stuff to whether it's us or somebody else
Yeah.
that does their accounting work. They can get their things a little bit more streamlined.
Right.
And we're going to offer a webinar for customers in Maine regarding a brand new tax credit program that's kind of like the one in New York, where if you build or buy stuff in Maine for farming,
Yeah.
you can get money back.
Mhm.
And so that's brand new for Maine. And we're really excited about that to deliver that to our Maine customers because we want to get the word out to all of them so that they're aware of that.
Mhm.
We're certainly here to help them. We have a great team up in Maine with offices in Presque Isle up near the northern border near
Mhm.
Canada. in Auburn, Maine, and those customers up there will be really uh, set up for success with this information and with anything that we can help them to better understand the credit. They're going to become um, better for it in their businesses.
Well, I mean, what you said, if I was going to summarize it, is people should continue or start to see farm credit as a resource, as a knowledge exchange, as a resource to say what's new, what's changing, how can I interact with it?
Hmm.
Because like people will ask me, like, well, Mark, what is the investment tax credit?
Right.
And I look around saying, I can't believe you're in business and don't know what the
Don't know what it
investment
is.
tax credit is. But people don't know because they're farming, right?
Right.
They're growing apples, they're raising cows, they're raising corn, they're
Mhm.
doing those things. And to see farm credit as a resource, especially under your division, to be like, hey, to everybody on the ground interacting with clients, help them understand that there's several ways that you can learn what's going on and what's changing. Whether that's through, a blog and interaction on the website, whether that's a podcast, whether that's a note, or whether it's just somebody who, when you interact with the person who does your payroll or does your taxes or does your lending, they say, by the way, there's been some changes in
Mhm.
investment tax credit, which I can explain to you, or I can get somebody on the team to do that,
Right.
right? Because that's the stuff that we're talking about, is that value that we can bring. Because people do shop based on price, like we know
Absolutely.
that,
Absolutely.
and they shop on ease. But the reality of his value is important.
That is
It
important.
just
And
is. People make a
knowledge.
difference.
Knowledge is important. People make a difference there, and our blog has been pretty successful. From a number of viewing standpoint, and I think it's called the Tax Talks that we put out there on a monthly basis. We try to do that. One went out yesterday, for example, just on things that farmers still not may be aware of, but the beneficial ownership interest. So the rules that require an LLC or a corp to file stuff with FinCEN, the Financial
FinCEN,
Crimes
yeah.
Enforcement Network, to let them know who the partners are in their businesses, what their addresses are. That's been kind of put on hold from the
Yeah, I
courts.
just saw that the other
Yeah,
day.
and so right now there's an injunction nationwide where customers, or all businesses, don't need to do that unless that injunction gets lifted. That reporting requirement has gone away, which is frankly really nice because we've done a lot of outreach with that, a lot of communication there. But my concern has been with that, Mark, that it's still, to your point, people are farming, they're planting, they're
Mhm.
harvesting. A lot of folks still are, I would say, unaware of the requirements, and those penalties are pretty high: $500 a day, $10,000 a year, possible imprisonment for non-compliance, and it's a very demanding requirement there. So I was glad to see that it got
Yeah.
enjoined, which is good news for all businesses across the country, in my view. Although, we'll see how that plays out. Hopefully, it doesn't get lifted, but then we'll at least have some time because New York State also, not too long after the feds had followed suit, where they're going to be implementing a similar program for January 26th. So,
Yeah.
for those people that have LLCs in New York State, we have a few months to kind of worry about that moving into 2025.
Yes. Yeah.
But as that matures, to your point of keeping customers aware of what those developments are, is important knowledge base for getting the information out to customers on that. And to your point, I mean, you're doing this podcast. People will listen to it. Cover you. Hopefully, they say, "Well, let me call Mark because he's got some good content there."
Yeah.
I can't tell you over the years. When I was before my new role, I was doing the blogs every month, and just on random tax topics. And
Yeah.
I can tell you, we've had a handful of clients just based on the blog that have come in the door.
Yeah.
Hey, I'm growing X, Y, and Z, and I read an article on this. Is that really the case? Can you talk to me about that? Is
Right.
that and a few of those customers, a couple in particular, they have brought on in themselves another 10 or 15 customers that are, some of those customers that may not have otherwise even known about Farm Credit. So
Right.
the outreach has a multiplier effect,
Absolutely.
with podcasts or with blogs. And it's really, even as you know, Mark, it's maybe a 2, 3, 4 page, 4 paragraph blog. There is some work that goes into that, right? The hardest
Yeah.
thing that I can tell you as a writer, because I still write a publication for Tax Notes, which is a tax blog for nerds like me who like to read the technical policy stuff. You write a 2 or 3 page paper, that may take you a week to do that,
Mhm.
right? To kind of really kind of hone in on it. And
Yeah.
the key is always to articulate in a simple fashion, which I try to do so that customers can understand, because customers don't do what you and I do every day.
Yeah.
Our job in a large degree is to simplify the complex,
Yes.
right? Make it understandable, and then deliver it in a way that the customers can take the information and add value to their business.
Yeah. They have
And
to be able to digest what you said.
they have to digest because it's no different than an estate plan. It's the hardest. I tell customers all the time, the actual estate planning from a technical standpoint is
Not really
very
the
easy.
Yeah.
Maybe you need to do some gifting or put some trust in place, X, Y, and Z. The hardest part is the psychology.
Mhm.
It's the buy-in,
Yeah.
and and those can't come without first the client fully understanding
Mhm.
the plan.
Yeah.
Because what I've told
They have
people
to
over the
understand
years,
the why. They have
the
to understand
why.
the Simon Sinek, right? It's like, I need to know why we're doing it.
Why are we doing this? How does this impact me? How does this impact my family? And then, I tell people once you understand that, you need to be able to sleep well at night.
Yeah.
And if you can sleep well at night, you'll probably be able to execute your estate plan. If you're tossing and turning,
Yeah.
you're
Probably
probably
not.
not going to
Yeah.
execute your intergenerational planning that your work with customers on, or the estate planning as well. You just won't get to the finish line,
Mhm.
and then you'll be frustrated with yourself or your advisors or with the whole process.
Yeah.
That's not a good outcome for anybody.
No.
But that takes a lot of time to get to that spot of, because
Yeah.
you were mentioning earlier that you're spending a lot of time these days with just helping people work through those emotions. So how have you were talking a little bit before the podcast started. How have you, Mark? Has that changed? Has it gotten more intense over the last few years with people, or has it kind of always been there? But is it maybe a little bit of context of like from your standpoint of how you spending your time with these people on, and just kind of the getting them to that why?
Yeah.
Yeah.
Yeah. I don't know if it's more intense than it's ever been, but it's certainly more intense for us than it's
Mhm.
ever been.
Yeah.
And maybe it's just because of a stage of career or life, but in the ag space, I spend more time in behavioral management than I do in technical analysis.
Yeah.
100%. Because there are some super smart people that we know that can break down the technical piece. But getting people to understand why, and getting people to understand that you need to take a positive action to make this happen. Like, for change, there must be progress. You can't just say, okay, that's great. I'm glad you told me that, Dario,
Mm-hmm.
but not do anything.
Right.
I think the other part is generationally, it's definitely changing. It's kind of a cop out to say that the folks, my grandparents communicated differently than my parents, than me, than my kids, right? But it's true.
Mm-hmm.
They want things that are different. Now, as I'm starting to engage with those folks between, let's say, 20 and 40, the way in which they engage is different, and they want to know things. And the previous generation has a lot of feelings around who they are and what they did and what they built. And some of this new generation wants to change it, which is great for
Mhm.
this long-term focus of let's make progress, let's stay relevant, let's still continue to be here. But mom and dad or grandma and grandpa, they don't necessarily want to change.
They
It's
don't
like, well, why do I have to change?
Right.
And I mean, I sat in a 2-hour meeting the other day in a county far, far away. And grandpa basically said that there's a person on the farm that's really good and knows how to do everything in the fields. And then he said, but I don't think he's ready. Grandpa's in his 80s and he's the only one that drives equipment.
Mm-hmm.
And part of me wants to say, look, grandpa's never going to give up control. Like, we can talk to him as much as we want, but he's not going to. So we need to work around that, because you're trying to say, let's move this immovable object.
Right.
So part of our job, I think, sometimes is expressing everything, give them options, tell them what we think was best. And if they hit a roadblock there, then we just got to keep going around it.
Right.
Because otherwise we get stalled and nothing happens. You and I have been involved in lots of cases where people have done planning, tax planning, estate planning, generational transfer planning that goes on for years.
For years.
And it never gets done. They never, like, did you sign the documents? No. Did you get a copy of the documents?
No.
I think so. No.
No.
I'm not sure. It's like, well, what's the point of
What's the
doing
point of
this?
spending the money and doing it?
Right. The point is we got to make progress. We got to move forward. 100%.
100%. And those can be so tough because, even people like generational differences can certainly make a big impact on the process. And even to that point, risk profile, right? As a guy like
Yeah.
me, still a couple of years under 40, right? My risk tolerance, for example, is I'm sure going to be a lot different than if I live
Right.
to be 65 or 70.
Yeah.
And then do you want to leverage that free and clear asset base
Right.
to, maybe for your kids, because you maybe still own the land and your kids want to expand the business and do X, Y, and Z, but it requires your capital. And working through
Mhm.
that is can be really challenging because
Super hard.
you spent a whole generation building up capital and you've earned it.
Yes.
You've earned the capital,
Yeah.
but then now that may be needed to spur investment. So walking through that and trying to thread the needle of knowing that there are different risk profiles in the room. No different than when you give people investment advice
Investment
or
advice,
bring
same
people
thing.
their portfolios of, well,
Yeah.
what's your risk tolerance? Are you okay with volatility in the equities market?
Yeah.
Do you want me to throw you in some 20-year treasuries at
Right.
4.5%? And that's always an interesting, particularly even now these days, it's, I've thought a lot about, even that from an investment standpoint, but are those, and you can speak to this certainly better than me, Mark, but are those treasury bills even safe anymore? And what I mean by that is, I guess it depends on what inflation you do. I think this morning I just saw before I came here some ping on one of the inflation indexes
Mhm.
was over what it thought it was going to be again. So if inflation is going to erode your capital,
Mhm.
I think it's sometimes not thought through of that is a risk factor in your profile.
But people don't see it as a risk
Huh.
profile, right? Because the dollar that they have, they say, well, if I keep that dollar, there's no risk. But they don't understand if that dollar can buy less, there is risk,
Yeah, combine
right?
absolutely, and it's it's interesting because I spend a lot of time being on the road so much, listening to podcasts, and I still think 95 or more percent of people think in terms of that nominal return.
Mm.
But the question I always ask when people are saying, they're talking to investment advisors and say, look, I don't offer that advice, but I know enough to say, maybe ask them questions like, what is your real rate of return?
Yeah.
Right? If inflation's at 9% and you're happy with a 3% rate of
You
return,
just lost money.
you just lost money. You need someone like Mark to walk you through and explain what's going on
Yeah.
as far as yeah, the return is maybe safe as it's coming into you, but are you on par or did you lose purchasing power?
Yeah.
And what is that going to do to your lifestyle if you lose purchasing power?
Well, we talk about that all the time, right? So you take these farmers and or somebody's getting ready to retire, and we say, listen, the rate of return on your portfolio, the only thing that matters is the rate of return above inflation.
Right.
So if inflation's is 3 and we earn 6, we made 3%. That's all that really
That's
matters,
all that matters.
right? So if inflation's at 6 for several years, we have to make 8 or 9.
Right.
And it just is what it is. So when people say plug into the computer and just say, well, I'm going to average 6 or 7%, it's like, well, that might work or it might not work.
Hmm.
The other part, I think, in agriculture in particular, and this goes back to what you guys do all the time with the risk mitigation, is I have a farm and they have millions of dollars invested in this. And the return on that equity is so small, but they're like, well, this is what we do and it's safe and everything else. I'm like, but you can take that without the labor, without the stress, and you can put it in a treasury and make more. Then why would you invest in that? You need to invest in other
Right.
places.
And it's such a spot on comment of, and I think this goes to maybe a broader point that we're getting to, which is even in the estate planning context, Mark. I think what you offer to people is so important because as they can work with someone like you and maybe build up a nest egg outside the business,
Hmm.
that creates so much
So much
optionality,
flexibility.
so much
Yeah.
flexibility with you may not need to sell your interest at full freight to the next generation or to
Yeah.
another partner because you spent all this time building up a brokerage account
Yeah.
or an
Something.
IRA account or
Yeah.
something that's out there on the side. And even right now, a lot of our advisors are talking to you. We had a couple trainings a few months ago, and this topic came up of as we think about New York, for example, we were talking about Maine there a second ago. A lot of farmers now are getting 20% back refunds for their capital improvements.
Right.
And so really good, they need to be talking to their tax folks, talking to their investment advisors, and figuring out what's the best place for that money. Yeah, if it's for a large expansion, okay, you may want to put it back in and pay off your 7% interest
Right.
loan. Or can you see maybe you can take some of that and save it on the side and give it to an investment
Blasphemy.
advisor,
Blasphemy, Dario.
right?
I can't believe it.
And so maybe
Yeah.
now you take the next 3 years while it's here till 27. If you can build up a six-figure sum on the side,
Right.
you've created optionality for your farm.
Yeah.
You've created cash flow that's not tied to the risk of the business,
Right.
and you've just gained that much more flexibility in that regard. Because what's the S&P this year to date is up to 27%,
Yeah, almost 28%.
almost 28% as of today, and it's it's been phenomenal. And it's like that is
Yeah.
that is an impressive return for the S&P
Well,
500.
and the reality it is when farms come to Farm Credit or they come to us and they say, well, I'm going to buy land, I'm going to buy cows, I'm going to buy trees, I'm going to buy whatever else because it doesn't fluctuate. The interesting thing is we don't daily value our farms or our
Mhm.
commodities, but in the stock market we daily value
Right.
it. So people see and say, "Oh my gosh, Mark, I just got my statement and I went down." I'm like, well, there's times over the last 20 years, if I was to give you a statement every month on your farm, it was worth less
Right.
than it was the month before. But you wouldn't just sell it because it was down. You'd be like, no, I'm in the long game. But if it's in investments outside, somehow it's something that's it's different.
It's different.
And but it doesn't it shouldn't be different, right? So we always look at it when people say, all right, we've got this investment tax credit that came back and we have this $100,000. Certainly, if it's a dairy and you have a debt ratio per cow that's a little high and it makes it hard for cash flow, then maybe it does make some sense to put it back then and pay down. And farm credit's good to say, hey, if you need it back, you've got a line of credit, you can get it back. Maybe it makes some sense to fund your 401k. Maybe it makes sense to put it into something that's
Mhm.
outside. Because if I was to take all of my money and say, I'm going to buy XYZ stock, Dario, I'm going to take all of your life savings and put it in one place, he'd be like, Mark, well, don't you think I should be diversified? But what do farms do? They
Right.
take all their money and they put it back into
They
the
put it
farm
back in the
business.
farm.
And over a long period of time, that risk works.
Mhm.
Generally speaking, if you make a handful of good decisions, for every decision you make, for every 3 decisions you make, if you make 2 good ones, in agriculture, 20 years later, you're going to have a great farm, right? That's just the reality of it. Make a few more good ones than you did bad ones.
Mm-hmm.
And investments, it's the same thing, but people don't see it that way.
Right.
You know?
And even if, like, for example, the last 100 years, what the S&P averages 10,
Yeah, just over
11%.
10%, yeah.
And so to your point of, in the age of constant information, right, you see these blips and this volatility, but unlike land perhaps, but it's
Right.
over the long term, it's constantly that 10, 11% market. I remember when I graduated in 2009, but 2008, right, when the market crashed down to 6,000 point within what 16 so months, it was back to where it
Yeah.
was. So you'll have constant blips, but that to your point, Mark, too. I mean, and I'm sure as you advise people, there's probably also different buckets of it, right? If you
No
need
doubt.
your short-term liquidity, maybe there's a different profile there. So
Yes.
keep your 1-year cash in maybe some treasury bills, or at least the last couple of years, maybe some money markets that generate 5%
Something
or
that
so.
makes reasonable
Yeah,
interest.
and then you have your 3 to 5-year funds and beyond, and you with different liquidity needs, you can then tailor those to different investment needs, right?
Right.
And have that portfolio built and optimized so that even if the S&P dropped down, right, 15%, you don't need to pull from that while it's
Right.
depressed. You can pull from
From other areas.
the other from your 12-month liquidity fund.
No different than your farm, right?
No,
Not every part of your farm is up every year. It just isn't.
it's just not.
And expand on your concept. If we as business consultants, tax business consultants, speak with people and say, listen, the way I can value your farm, right, when you go to leave, let's assume that you're not selling it to some third party. It's, to a key person or to the next generation. There's 2 options, right? I can look to maximize my return on that investment.
Mhm.
I want to get as much money possible. And you and I know that fundamentally a farm that's trying to get the absolute best out of it, it makes it much harder for the next generation,
Mhm.
right? Just is.
Just is.
So if you can go in there and say, well, listen, it's not about maximizing the return on my investment. It's not about what farm credit says my balance sheet is. What it is what can it provide me as a lifestyle?
Mhm.
So if I say I need X dollars of income rather than X millions of dollars, if I can put that there and then I have money on the side and that makes that makes my lifestyle that I want, the farm has a better opportunity to continue in the future. And that's what we're all trying to do, right? Farm Credit wants your farm to go on for generations. Mark Modulewski and Legacy Wealth Advisors wants it to go on for generations. It's better for all of us
Right.
if that happens. But sometimes they see our advice and they say, well, it's tainted. Like, well, Farm Credit's just trying to loan money. It's like, well, no, they're trying to loan money to responsible businesses that have the opportunity to grow. They don't loan money to everybody exactly the same. If it's not a good business plan or if you're struggling, it's different, right? You don't give the exact same tax advice to every farm. You give the tax advice to the farm
Based
that's
on the
best for
profile.
that farm, right? Like, what happens there? Should I invest in this or not? Should I depreciate this? Should I take it under 179? Whatever. Well, you're giving that advice based on their profile. It doesn't matter what the guy down the road does.
That's exactly right. And even right, a lot of these, as those folks are saying, to your point, it's, a lot of times, I would say generally they want the farm to succeed. So that, they're what they can get paid may be capped, because if they ask for full dollar, it may burden the business so much that it can't be viable
Right.
long term. So, or in some cases where it can be, it's that would work. But oftentimes there's a ground where
But it stunts growth
it
significantly.
stunts growth, and so having that built out portfolio of stuff on the side is really critical. And the rules there have gotten much more favorable. Well, I would say for the most part, there, like, as required minimum distributions, the age for those have gone up, so
Yeah.
you can keep your income in your IRAs and stuff a little bit longer without having to
Yep.
pay income tax on that. Although a little nuance there, because I do believe the Secure Act, that 10-year rule, where if you die, if you die and leave it to your kids, that rule has possibly harmed a little bit with the traditionals, because that money now is, if my dad dies today down the street and he leaves me a 401k, and I've taken that money out in my prime earning years, as typically 40 to
Right.
55 is your prime earning years, that nest egg can shrink dramatically with taxes.
Sure.
But also to your for guys like you and I, that's another opportunity where we can add value on. Okay, well, what's the best diversification, not only in your portfolio, but diversification from a tax standpoint? Taxable brokerage, maybe some pre-tax stuff, maybe some Roth stuff. Don't put don't put all your
Yeah.
strategy into one basket, but maybe have a handful of those.
Right.
That way, no matter what happens, you can have good outcomes. Because I remember, I used to teach with a guy who had passed away now at the Cornell tax conferences, named John Schifferly. But he would always tell me years ago, Dario, make sure you always do pre-tax, because I'm old enough to remember when Social Security came out, it wasn't taxed, and now it's taxed. And I can tell you, I'll be dead, but at some point they're going to tax the Roth IRA. So put it all in pre-tax, get your deductions now. And I was like, you could be right, John. Maybe, but I go at the same time, I see a lot of value. I see a lot of value in the Roth standpoint, particularly for inheritance purposes. If you're going to not use it all and give it to somebody else, but my plan has always been, like anything else, just diversify it: brokerage, pre-tax, post-tax. Have a bucket of them.
Somebody asked me, so I did a meeting yesterday in Buffalo, and it was for a 401k plan that we administer. And one of the people in the audience said, well, Mark, which one's better? Is it better to have all my money in traditional or in Roth? And I said, yeah, it is. And they said, well, what do you mean? I'm like, look, if you get to retirement and you come to someone like me and says, help me plan my retirement, I would, in a perfect world, like you to have 4 buckets. I'd like you to have something that provides passive income. I'd like you to have money that you're paying, regular money that you've been paying tax on all along. I'd like you to have a Roth bucket, and I'd like you to have a tax-deferred bucket, right? A traditional bucket. Because this way, when we design your income, we've got flexibility on where to take the money from. If everything's sitting in something that's taxable, whether it's, land or if it's a building that's totally depreciated or whatever else it is, right? All of our farms have zero cost basis, or pretty close to it.
Pretty close, yeah.
And they go to take the money out, and every single dollar is taxable. So you build this thing every single month that comes out, and then they need a new roof, and they said, I need $20,000, where it's like, all right, well, now I got to take out 25 or 28,000 to make that happen. But if I have these other options, I can pull from those options, and it gives you a better chance to do what everybody wants to make sure happens, which is, I don't want to outlive my money.
My money, right?
That's it. End of
That's it.
story. I don't want to wake up the day after I spend my last dollar. So it's a relatively simple concept. One of the reasons why I love working with farmers is, while they are just average, ordinary people like us, they see the world differently. So I'm gonna change this question. I'm gonna push our direction. What is the thing that is the biggest opportunity for us in agriculture over the next, let's say, decade? And what are the things that are maybe the scariest for agriculture over the next decade? From your standpoint, right? Professional,
Sure.
tax person, works for a large lender, understands Northeast agriculture. What's the thing that excites you the most, and what's the thing that maybe makes you a little bit nervous?
Yeah, that's a great question. So, certainly, I would say at least keeping in New York State for now, but also, um, Maine. I think the policy at the state level,
Hmm.
that is spurred investments is really exciting. That has allowed farms to continue to grow at a really great pace. So the last year, and more so, we've seen a lot of expansions on a lot of farms,
Yeah.
and I think that's due in large part to the investment tax rate in New York State
Yeah.
funneling in there. For those that are dairy farmers, there's been some nice developments with the Fairlife plant coming up in
Yeah.
Monroe County. There's Great Lakes Cheese down in Franklinville. So the investment that's going into
Yep.
processing has
Yep.
been very exciting there. So that's encouraging. There's a lot of a lot of young beginning small farmers. We have a mission to make sure that we have proactive policies and do things to encourage development and entry into the profession. We've seen a lot of interest in our governance from our customer service councils, which are kind of the local customer feedback folks that
Mhm.
provide feedback to our managers on the ground. A lot of new blood there. So the future from a generation standpoint is nice that there's that next generation coming on up. It has been really encouraging. Probably, the two biggest tailwinds are labor. I would
Mhm.
say number
Yeah.
one. There's certainly some concerns of finding good labor.
Yeah.
No different than accounting, but finding folks uh, to work on farms can be challenging, right? There's less and less farm kids. I mean,
Yep.
demographically, one of my side hobbies is kind of following demographics, but the whole world basically, for the most part, there's a few spots that's not the case, but is not having enough children to
Population shrinking
population
everywhere
shrinking.
outside of Southeast Asia.
It's shrinking,
Yeah.
and so that impacts rural areas of
Yeah.
population shrinking. No doubt about that, and that means, right, congressionally, there's less folks coming from rural areas.
Yep.
That can make it harder. Well, we still don't have a full extension of the farm bill, for example.
Right.
And then the flip side of that, there's some concern about you know labor, some unionization stuff that has some concerns. I don't want to say speak whether that's right or wrong from an official standpoint, at all in my role, but that has some concerns across the
Mhm.
country, and across some farmers, big issues there.
Well, because that really comes down, not to interrupt you, but that really comes down to the cost of producing goods and services.
Sure.
That if the cost of labor significantly increases,
Hmm.
that's going to make, in theory, farms a little less
Right.
profitable. Because not all farms, most farms control the price of the product they produce.
Right.
And I don't think people understand that,
Right.
right? It's not like the farmer says, here's how much I'm going to sell my milk
Right.
for, or here's how much my corn is going to go for. Yeah, there's a little bit in farm markets and direct CSAs, but when you sell to a slaughterhouse, when you sell to Wegmans, they tell you kind of here's what the price is going to
Here's
be.
what the price is going to be.
Yeah.
Exactly right there, and even again, we've been very fortunate in New York here with great support from the governor and the state legislator, where there are some tax incentives for labor,
Yes.
whether it's for the people that you employ, whether it's for overtime, for
Overtime.
example.
Yep.
So those have been really helpful. And I know you put out some great content on minimum wage. I think in some of that stuff recently too, which is
Yeah.
were very nicely well done. And then probably the other, I would say the unknowns of the next administration.
Hmm.
Are there going to be tariffs or not? And what does that mean for agriculture?
Hmm.
We don't know.
Sure.
We don't know how that all plays out. Where are there?
Is it political posturing, or is it an actual
Yeah,
focus?
is it
Right.
posturing to better negotiate, or do we end up utilizing some tariffs that then create retaliatory tariffs? All unknowns from a policy standpoint.
Right.
Um, so we just I would say that's some of the unknowns in the space that probably are uh, looking at the tailwinds that are coming up the pike here. So it's kind of like tax law, Mark, where the old adage in my business is the only bad tax law is a new tax law, right? So
No doubt.
if you know what the rules are,
Then you play by
then
them.
you play by them.
Yeah.
Where it's anytime there's uncertainty is where it creates hesitation on making investments or doing things from a 5-year outlook. So the more certainty can come with things, the better.
Yeah.
I suspect we will have a tax bill in 2025, so that can get rid of that uncertainty.
Sure.
That'll they'll have to figure out. Right now, they're looking at whether it's one or two reconciliation bills, which means they don't need 60 votes in the Senate. But there's a small margin that they can really afford to lose in the House to get
Right.
things passed. And even President-elect Trump has talked about repealing the state and local tax limit for the $10,000 that people can deduct for income taxes for states. My gut tells me they'll have to hobble a coalition together that includes that SALT repeal
Yep.
and some of those things. But there will likely be a tax bill
Mhm.
in 25. It'll likely be extended. We just got to kind of get to that point because there's some other things that will take up some of the oxygen before then too as
Sure.
well in Congress.
Yeah.
And that'll be a good step in once we can get a tax bill beginning to then again have certainty in that area.
Yeah.
So bringing more certainty will help mitigate some of the tailwinds.
Mhm.
But anytime you have uh, policy changes or uncertainties in the policies, it creates a little bit of a pause of, well, what's going to happen?
Yeah. Yeah.
How about
And-
what do you think? Do you agree, disagree, or
Yeah, I think if I look over the next decade, the opportunity is utilizing technology.
Yep.
Very similar to what you say is how do we do things a little better? How do we do it a little bit more efficient? And I think my major challenge, very similar to yours, how do you attract, train, and retain key people? Um, and that's what I think I'm talking to businesses in and outside of agriculture all the time. For the market, the tailwind, the stuff that's pushing us forward is economic growth and certainty. So the new administration comes in, they have their focuses on where they want to put money and invest money. The market likes that. They'll invest in that, and the market will do well. The headwind to us is a little bit of that inflation piece, like we've talked about, right? If there are some tariffs, even if energy prices go down, which hopefully they do and will drive a robust market, if there's a little too much cash in the system, then inflation might stay where it is, and that could be a little bit of a challenge. The other part is the uncertainty in world politics, right? Very honestly, if Russia and Ukraine goes a different way, if Israel and Iran go a different way, if China and Taiwan goes a different way, well, that's going to affect the markets. That's going to expect exports of our farming products. It's going to affect the markets internationally. So hopefully the new Congress and administration can settle those things down a little bit so they don't, no pun intended, blow up, right? Because that's the part we can't deal with. When people say, "Well, Mark, what do you think is going to happen?" Well, generally speaking, if we have policy, we know where we're going, the market's going to do well. But I can't predict headline risk or event risk, right? If the World Trade Center goes down, the market's going to go down.
Right.
It is what it is. Not forever,
Right.
but it's going to go down.
Right. If
So
China invades Taiwan and we can't get semiconductor chips here stateside,
it's going to
it's
affect
going to
it.
affect us. I mean, the CHIPS Act and that was passed, I think, was a good framework for you and I are local here to Micron,
Yeah.
right? Coming into Central New York, for example.
Yeah.
But that infrastructure probably is still several years out from
Yeah.
being built, where not having semiconductor chips would be a real problem for the United States.
Because if everything is pushed on technology, right?
Right.
I read an article the other day. I was at an investment conference, and this woman said, you should read this article. And it was about an AI hub in Arizona, and they were building a mini nuclear reactor. Private equity was raising money to build a mini nuclear reactor in Connex shipping containers outside of it. So it's energy independent, and that AI can run in service regardless of what happens. And you say, well, why is that an issue? Well, if they can't get power, if they can't get chips, if they can't get access to that stuff, it all goes down.
It all goes
Copilot is amazing. ChatGPT is amazing if you can get access to it.
If you can get access, well, you bring up a great, it's such a great point that I made me think about. Again, one of the big risks is we need more energy in the country. So it's actually interesting. As I've been traveling around to different parts of the Northeast, it's becoming more and more concerned of, like, as you do an expansion for your business, for example, is there power? Can you get power from the grid?
No
Is
doubt.
there enough? Because a lot of these, right, AI needs data centers.
Yeah.
These things need power from the grid. Do we have enough power right now in the U.S. to fund or
Right.
to energize, right, all of the AI? And we need to make massive infrastructure
Huge.
changes and building into that so that we can facilitate the growth of technology.
Yeah.
And right now it needs more.
It does. And it's exponential, geometric growth, right? It's not just where it's going like this. It's actually going up.
Right.
Ridiculously fast. And I think there's some opportunities there, like statewide. Can we lead the country in the Northeast to say, not that I want to compete with, National Grid, but the idea of what if you did have a small nuclear power plant outside here that powers the dairies in a county? So now they're not worried about it. I work with a dairy now that's going through an expansion, farm credit client. And one of the challenges they have is that the substation down the road from them doesn't have enough power to power this. And they say, well, it's 2-3 years out because we have to get transformers and those are on order, and it's just not something that happens right away. So that's the headwind, right? Like that's the idea of, this is all amazing, but we may want to go, but we just can't go because I can't flip it on.
I can't flip it on.
Or I don't have the people to do it. And so the labor piece, the energy piece, but the excitement is just like AI has changed us, our team. We don't have any paper in our office anymore, and it's amazing to think that, right? Very few pieces of paper, and we support over 1,000 households and 75 different businesses across the state that we directly do business with, and my team right now, I have 3 staff people and another advisor, and those 3 staff people, one is working remotely out of Denver, one's working out of Camillus, and one's working out of Ballinsville, just because of what's going on with their families. So the way to attract and retain good labor is to make sure that we kind of meet them where they need to be, and they're amazing people and they do a great job, but they can be efficient working there.
Sure.
I would love everybody to be here every single day, but that's just not the new norm, right?
Right.
We're
We're in
not
a hybrid.
Yeah, we're just not there. And if I ran a trucking company, you have to be present to win, right? You have to be there. Somebody has to drive the truck, but I don't, so I have to flex. But listen, it's amazing. It's been like an hour and 15 minutes. It goes by like ridiculously fast to make that happen, and I loved it. And I hope we can do it again.
This was great, Mark. Really great conversation, intriguing, thought provoking. So appreciate you having me here this morning.
Yeah, no, it's been great.
Yeah,
Well,
Merry Christmas to you and your family. Happy holidays, and we'll certainly, I hope get in touch soon and
we'll do it
continue,
again.
and we'll do it again, and we'll get you out to Farm Credit here as we look at 2025 and keep building the relationship and get you in front of some staff, and we'll put together some good training programs and kind of
it'll be
look
fun.
and extrapolate that. So thank you.
Thanks, buddy.
Thanks.